Did you know that understanding just a few key tax changes yearly can save the average family thousands of dollars? Whether adjusting your deductions or planning your retirement contributions, minor tweaks can have a big impact. Hi, I'm Tim Gardner. Over the last 25 years, I've been a financial advisor and helped hundreds of families navigate changes and maximize their financial potential. Today, I'm here to guide you through the most essential financial updates for 2025. Now, before we dive in, I've created a free key financial data card to help you track these changes. You can download it using the link over in the description. And don't worry, I'm not asking you for your email, phone number, or firstborn in exchange for this piece of information. It's a free tool to help you. The big news is that the tax brackets and tax rates for 25, there are still 7 brackets, so let's run through them rather quickly. The tax brackets and rates for single filers for 2025. The lowest tax bracket you can see goes up to 11,000. Single filers with taxable income over 626,350 are in the top bracket of 37. Here are the brackets and rates for those married, filing jointly, and surviving spouses in 2025. The lowest bracket you can see goes up to $23,850. Filers with taxable income over 751,000 are in the top bracket of 37. Here are the tax brackets for those filing as head of household. The lowest bracket you can see goes up to $17,000. And filers with taxable income over 626,350 are in the top 37% bracket. Here are the brackets and rates for those married filing separately. The lowest bracket you can see goes up to $11,925. Filers with taxable income over $375,800 are in the top bracket of 37%. Now, for most married couples, filing jointly is usually the most favorable, but there are some circumstances that might make sense to file separate. This is something that we can discuss if you want to meet. And lastly, here are the rates for estates and trusts this year. In this situation, the top bracket, 37% marginal tax rate, is kicking in for estates and trusts over $15,200. Now let's look at standard deductions for this year. The standard deduction shown here increased slightly from $29,224 to $30,000 in 2025 for married filing joint, from $14,600 to $15,000 for single, and for married filing separately filers, from $21,900 to $22,500. Remember, the ability to take personal exemptions has been eliminated, a change which to some degree tempers the benefit of the higher standard deductions. The additional standard deduction amounts went up slightly from 2024. Thus, people who are blind or over 65 receive an additional deduction of $1,600 each in 2020, up from $1,500 in 2024. The additional deduction also increases to $1,950 in 2024 to $2,000 in 2025 for taxpayers who are blind, unmarried, and not a surviving spouse. For 2025, the child tax credit is $2,000 per child. $1,700 of that is refundable for those with income under $400,000 filing jointly, or $200,000 for all others. Tax rates for long-term capital gains and qualified dividends generally are unchanged at 0, 15, and 20%, but the brackets will change. For 2025, the 15% rate applies to capital gains or dividends that push the taxable income above $96,700 for joint returners and surviving spouses, $64,750 for heads of household, and $48,350 for single or married filing separately taxpayers, and $3,250 for estates and trusts. The 20% rate applies to long-term gains and qualified dividends that propel taxable income past $650 for joint filers and surviving spouses, $566,700 for heads of household, $3,400 for single filers, $300,000 for married filing separately, and $15,900 for estates and trusts. Remember that exemptions can also apply to art collectibles and Section 125 gains, of course related to any deductions or depreciation. Now we'll cover some additional taxes that may be relevant to you. The alternative minimum tax has been adjusted for inflation and will continue to affect fewer and fewer taxpayers under the TCJA. In 2025, the exemption amounts rise to $137,000 for married filing jointly taxpayers. That's up from $133,324. $88,100 for single filers, up from $85,700 in 24. $68,500 for filers who are married filing separately, up from $66,650 in 24. The exemption amount for estates and trust rises to $30,700, up from $29,900. The exemption amount for estates and trust rises $30,700 from $29,900 in 2024. Some high-income taxpayers owe net investment income tax (IIT) of 3.8%, which is levied on the lesser the amount of net investment income or modified adjusted gross income. Over $200,000 for single filers and $250,000 for married filing jointly. These amounts remain unchanged from 2024. Net investment income includes taxable interest, ordinary dividends, capital gains, and other income categories, and some expenses that can be estate, gift, and GST exclusions rise from $13,610,000 in 2024 to $13,990,000 in 2025. Top federal estate tax rate remains at 40%. The IRS has issued final regulations for no clawbacks at the sunset, though. The value of gifts one person can give another without reporting it on a gift return rises from $18,000 in 2024 to $19,000 in 2025. Unlimited payments for tuition and medical expenses are permitted, though. Let's talk about educational credits, deductions, and distributions. Just as in past years, in 2025, taxpayers with qualified educational expenses can reduce their tax bill by up to $2,500, of which $1,000 is refundable, thanks to the AOTC. If their modified adjusted gross income doesn't exceed $80,000, that's $160,000 for married filing jointly. At that income level, the credit starts to phase out. This non-refundable credit is worth up to $2,000 in 2025. The credit starts to phase out for taxpayers with a modified adjusted gross income of $80,000, $160,000 for married filing joint. The Lifetime Learning Credit offers two main advantages over the previously discussed American Opportunity Tax Credit. LLC can be claimed for an unlimited number of tax years. The AOC is limited to 4 years per eligible student, and the student doesn't need to be pursuing a degree. The AOTC requires the student to be pursuing a degree or another credential. Parents and others who want to save for a student's education costs can contribute the maximum of $2,000 to these accounts. Contributions are after tax, just like a Roth IRA. The contributions and investment earnings grow tax-free if the funds are used to pay for qualified educational expense. Maximum contribution stays the same in 2025 and 2024 and 2023 and starts to phase out for taxpayers with a modified adjusted gross income of $95,000, $190,000 for couples that are married filing joint. As in 2024, the law continues to allow up to $10,000 a year in 529 distributions to pay for qualified private school K-12 educational costs, excluding homeschooling, though, a provision which might encourage taxpayers to focus on the 529 plans rather than the Coverdales. The law also allows rollovers from 529 plans, ABLE accounts for disabled beneficiaries until the end of 2025. However, make sure to check with your specific state. Some states are decoupled from the federal government and not treating the 529 plan withdrawals for K-12 expenses as qualified distributions. They also have specific rules regarding ABLE account rollovers. Retirement plans remain in the news and are subject to much debate these days. The total amount that employers and employees contribute to a 401k or similar defined contribution plan rises to $70,000 in 2025. That's up from $69,000 in 2024. The limit on how much compensation can be counted under the qualified plan rose to $350,000 from $345,000 in 2024. Meanwhile, the basic annual benefit limit for a defined benefit plan increased to $200. Most notably, there is now an extra catch-up contribution of $11,250 for individuals ages 60 to 63. In 2025, taxpayers who save for retirement in a traditional IRA or Roth IRA are limited to a $7,000 contribution, plus a $1,000 catch-up for those 50 and older. However, there is no age limit on your ability to contribute to an IRA as long as you have earned income. Taxpayers who do not participate in a retirement plan at work can generally fully deduct their contributions. However, income thresholds limit the deductibility of such donations for taxpayers who participate in a workplace plan or whose spouses are participants. The table on the slide shows this. Now, let's cover some major health-related numbers for 2025. We'll discuss HSAs, long-term care premiums, and Medicare numbers for this year. Health savings accounts offer a rare tax trifecta. Contributions are made pre-tax, enjoy tax-free investment returns, and money comes out tax-free if it's used for qualified medical expenses. The downside is that such accounts are available only to those enrolled in a high-deductible health plan, which can pose some steep upfront costs. In 2025, the minimum annual deductible for a qualifying health plan is $1,650 for an individual and $3,500 for family coverage. The maximum deductible contribution to an HSA in 2025 is $4,300 for individuals. The maximum deductible contribution for a family coverage is $8,550 with a $1,000 catch-up contribution available for those 55 and older. Taxpayers paying for long-term care generally can deduct a portion of their premiums as qualified medical expenses. The deductible varies based on the taxpayer's age and is subject to the 10% floor for medical expenses. The standard premium amount for 2025 is $185, though some Part B beneficiaries pay less due to the hold harmless provision that protects them if Social Security benefits rise slower than Medicare premiums. People who pay the higher figures include those signed up for Medicare Part B for the first time, those who don't receive Social Security benefits, and those who don't have their Part B benefits automatically deducted from their Social Security benefits, as well as some others. Meanwhile, as shown here, some higher income beneficiaries will pay more than the standard premium. Remember, Medicare premiums apply to income from 2 years prior, and that decisions made today will affect your future. There are key Social Security figures pre-retirees and retirees must be aware of. The Social Security estimated maximum monthly benefit is $4,018 in 2025, up from $3,822 in 2024. The maximum taxable wage base for 25 is $176,100, up from $168,600. The tax rate remains the same at 6.2% for employer and employee, 12.4% for those that are self-employed. The so-called full or normal retirement age for claiming unreduced Social Security benefits is 66 for people born between 1943 and 1954. For those born between 1954 and before 1960, the full retirement age is 66 plus a certain number of months depending upon your birth year. For those born in 1960 or later, your full retirement is 67. Sometimes retirees are surprised to find out that your Social Security benefits are indeed taxed. This slide shows the income thresholds at which benefits start to be taxed. To figure their bill, beneficiaries must compute their provisional income, also known as combined income. Combined income is income plus non-taxable interest plus half of your Social Security benefits. Sorry, I forgot to tell you there'd be math involved in this presentation. Our tax code has evolved a lot, from 2 pages in 1913 to over 75,000 pages of complex rules that are constantly changing. We've covered a lot of ground today, and here's what you should do next. Download the key financial data card from the description below. Like this video and subscribe for more practical tips. Schedule a free consultation with me to discuss the specifics of your financial goals. This presentation may have brought up questions on your own tax situation that you'd like to get some more clarity on. If so, schedule a time to meet so we can discuss planning and strategies for your particular situation. Remember, planning is the key to financial confidence. Together, we can make 2025 your most successful year yet. Thanks for joining me.